Hey guys, this is Market Update. In this video, we're going to be looking past the ETFs. The ETFs are in the news. Everybody knows about them. They're consensus now. So we need to look past that to what's going on over the next 12 to 18 months. This is a pivotal time, and the ETFs are just a tiny piece of all of this. So we're going to be looking at a lot of data regarding that and some of the reasons why Bitcoin is in demand right now. So what we can see with Bitcoin, firstly, is we're just kind of waiting for these ETFs. If you've been watching the channel, this little note has been on here for months at this point. We've been talking about them forever. And I'm on the week chart here. You can see that buyers are just, outpacing sellers at this point. Even though there's been some profit taking at these levels, you're just seeing us grind higher and higher and higher as more people place their positive bets. Now, the ETFs are not 100%, but everything is in place for them. We don't know what that decision will be, but of course, there are two price targets I have. The first one is 50K. If we get the ETFs, I do believe we will hit this. I don't know what the trade is going to be around the ETF, but I don't think it's important to focus on that. We need to be looking past that for the next 12 to 18 months, which I'm going to talk about in this video. So 50K, as you can see here, I think this is a very easy target if we get an acceptance. If for some reason there is a delay, then obviously we are going to dump extremely hard, because all of this is speculation that we get approved. So if people are on the wrong side of the trade, then of course we dump down. That would be good news for me, because you're getting a lower price for what I'm looking for, which is the next 12 to 18 months. So we'll go through that. If you're a trader, check out Bybit. Deposit bonus up to $30,000. Just check the link down in the description for the details. I'll get to some specifics on the ETFs in a second, but we need to look past that now, because the ETF trade has been and gone. It's done. The ETFs are next week. This is the event. And so, yes, it's going to be extremely volatile around here. It's going to be a ton of traded volume. No one knows really who will win out of sellers and buyers. There will be many on either side. The ETF trade was down here when we were getting news about Grayscale winning the case. That was the trade if you wanted to trade it for 6 to 8 months. That's been and gone. So now we need to look past that and ask ourselves, why at 45,000 is Bitcoin a buy here, or is it, right? So the next 12 to 18 months past that, we have the halving and we have rate cuts coming, both extremely positive for BTC. And remember, the Fed is the biggest whale in the whole world, and they can move things more than anyone else. So if we know what they're doing, that's really what we want to be trading at this point, because the ETFs we cannot trade now. US interest expense, 1 trillion. That's 250 billion more than the defense budget, 250 billion more than spending on Medicare, 200 billion more than health, and will surpass the 1.35 trillion spending on social security, becoming the single biggest outlay. The single biggest outlay for the states is servicing debt for the other things. So they have to create debt to pay off the debt that they have. That is a debt spiral, right? And that is obviously the debasement of fiat currency. You're creating more and more and more debt. Eventually what happens is the central bank must bring more of that debt onto its balance sheet and slightly reduce the interest rate over time. Now, within cycles, you get ups and downs in rate cycles, but the secular trend must be to slightly reduce rates over time. And those small amounts make a big difference when you're on scales like this. What that means is the debasement and weakening of fiat currency. Actually, around the world, as of right now, you can see this from Jamie Coots, the average currency debasement yearly is around 10 to 12%, something like that. So why is that important? Well, the debasement rate averages 11.5. That would result in money supply doubling every 6.4 years. Why does that matter? We earn in this currency. Our output earns this money, and our output gets devalued by 50% every 6.5 years. That is something we have to protect ourselves against. So housing protects against it. Stocks have typically protected against it, at least US stocks. And Bitcoin could be a tool that people can use to also protect themselves against this type of currency debasement. Why? Because it's non-government store of value with very low inflation. In fact, in April, around then, the halving will take place. that brings Bitcoin's inflation rate to 0.9% each year. And this will go down to 0% eventually in about 100 years. But with lost coins, it could actually be slightly deflationary. In any case, this is much better as a monetary asset than all of these fiat currencies. It's not about making money, it's about protecting yourself against the government stealing all of your wealth from the output that you make by debasing currencies by 10%. So Bitcoin is a tool. It may be useful for some people, and some people are demanding it, even as some portion of their portfolio. And that is why the ETFs have been in demand, and why BlackRock, Fidelity, and all of the other A1 players within TradFi are bringing it on, because their clients are demanding it to have some percentage in their portfolio to protect themselves against the debasement, which is very clearly happening. I did promise some crypto course updates as well. If you do have the crypto course, these are coming at the end of this week. I've recorded all these videos. I'll be uploading them later. There's some very in-depth research on the macro cycle, what's going on here, my portfolio here, and what's happening in cryptocurrency, because, things are moving. The halving is coming up in April. And so this is the time that crypto usually expands. So in any case, I'll be uploading that for free for all of you guys this week. I'll also send a message in the Discord groups with that update as well. If you haven't got the course yet, check it out. Link down in the description. The price will be going up when I update the course later this week. So you might want to have a look at that now before the update. So we're going to look at the ETFs. Now, why this is different is because all of the top TradFi firms have now gone through every stage of the ETFs. So as you can see here, they're actually telling us what the fees will be for the ETF. Now, why would you go through and make your applications and have your fees in there if you didn't think that this was actually moving forward, right? So you can see the fees here. A couple of them have come out. 0.8%, you've got 0.39% here. A couple of them are actually waiving the fee for the first 6 months. So there's a competition here to bring it on. But there may still be some issue that isn't worked out, right? Because this is a tight deadline. The 10th of January is that deadline. So of course we have to be wary about what will happen. But, investing through this period is something that I want to still do because of what's happening over the next 12 to 18 months. Let's have a look at some data around that then, because we know the Federal Reserve is done hiking interest rates. Other central banks will be done along with them. They all, go in concert these days. So in America, you still have positive real rates, and those real rates can just come down a little bit, not being stimulative or anything like that, but just the positive rate coming down, that reduces the real rate of interest, and that can buoy risk assets. And that will do that, because that's exactly how these risk assets work. So you have the Bitcoin regression model here. The purple lines are minus 2% rates. So that's stimulative rates, where rates are underneath inflation. And then you have the plus 2.5 rates if rates were restrictive above the rate of inflation. That's where we are now, but the spread may be coming down, and that's what Bitcoin is pricing in. So the regression model here is, we know that Bitcoin as a network is growing fundamentally. And so over time, it's a monetary network. The price is going to go up along with adoption, right? But the cycles of price up and down below these two purple lines depends on interest rates and the short-term macro cycles. So what we're doing now is going into a rate cutting cycle, hence Bitcoin is showing positive price appreciation. We may have around 300 to 500 days more of this as well. So if we look at each of the cycles, which you can see here, this bottom one is the current cycle. So this is looking at time in days after each halving. So of course we had drawdowns. We get them around the same time in each halving cycle. You then get an inflection, right? A low and an inflection and a recovery, which seems to happen around here. And that's around 1,000 or so days after the halving. And you can see you get the climb out of the halving around here, which can be very volatile. But on this occasion, we've had some drawdowns, but it's been fairly positive to the upside. Now, of course, we're going into the halving in April, which would be obviously 0, because that's the halving date. After that, you can see in each previous halving, you get a massive inflection to the upside in price that takes anywhere from 300 to 500 days. So we definitely have some time left in this halving cycle, and we have everything ahead of us in terms of interest rate cuts and everything like that. And it's going to be volatile because we don't know how the data is going to play out. But, you know, the scales have tipped, right? Down here, the scales were very clearly tipped to the negative side for Bitcoin, and the scales are tipping to the positive side for BTC. And so it seems to be playing out a lot like other cycles. This isn't just the Bitcoin cycle, this is the interest rate cycle and the macro cycle as well. So, you know, Bitcoin is a macro asset, so it's going to reflect that more and more. And then we can have here growth since cycle lows. So again, this is the cycle low here. The black is this cycle. You can see we're right here. So, you know, potentially a lot of growth ahead, right? In each previous cycle, it was still another 400 plus days of, you know, of growth in the price before it eventually tops out and, you know, starts to potentially go into, you know, a downside move again. So as you can see here, halving cycle, the halving is in blue, and the halving cycle top isn't anywhere from, you know, let's say a year or so after, which would be around here. So we don't know where the price is going to get, but just looking at cycle time, you know, and potentially how long this potential bull market will actually carry on, because we don't know where the price will go, but we can look at time and interest rates and what the central banks are telling us to give us our cue on whether we should be holding or potentially going into a down cycle, which obviously we can make decisions about if you want to hold or sell out, or you know, just, you know, start dollar cost averaging at some point if the price does dip down. The course update and other research will be coming this week for everyone in the Crypto Investor course, so you can check the link down below if you're interested. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.